this video, we're going to talk about how to trade confidently, having the amount of information that you need to make decisions about how we're going to move on an intraday or end-of-day basis, and having a process by which it's completely objective, it's data dependent, it's not about gut, it's not about feel, it's about having a process that we can just rinse and repeat, right? All right, so I'm Raghee Horner. For those of you that don't know me, I'm the lead trader over at the Sector Secrets Mastery and the Simpler Futures Room. And we are going to talk about how the Federal Reserve and how seasonals are dominating action. You might say, Rog, no kidding. We know that's what's going on. But let me show you how we can measure the data to see how we might find ourselves in a shifting environment. Because right now, clearly, since the FOMC, things have taken a turn for the more bearish. And by the way, I'm going to talk about also why this is not a surprise. And I know for many of you, it's not a surprise either if you've been keeping up with the top tier outlook as well as seasonal patterns that I've been teaching. All right, November 1, this is most definitely a hold, right? That's what's being factored in to the tune of almost 75%, while the hike is down at 25 and change, all right? So still far more expecting a hold going into November. The December meeting is still more probable to hold, but you'll see the difference between the hold expectation and the hike expectation don't have quite the chasm that they do for November, which means Fed fund futures traders are factoring in the Federal Reserve at least keeping the door open to a hike as needed. They're acknowledging the Federal Reserve has a lot more data and a lot more uncertainty in front of it before we get to that December 13 meeting, saying, you know what, there's a chance, let's at least factor it in. And that's what you'll see in the December 13. There's nothing here that suggests a hike before the end of the year is probable. That's not really the problem. What happened on Wednesday with the FOMC was that we collectively did not see the cut really come into focus in that probable way. What do I mean by probable? In other words, it's the highest expectation result for a particular meeting. July 31, you can see here, the quarter point cut makes it just above, this is the hold column, right? That's the hold. So this is almost 35%. This is 26%. So it's not a huge convincing expectation for a cut. And that's out in July of next year, July 31, right? So that's the problem. June, still more probable for a hold. May, still more probable for a hold. Now you'll notice that it's not as if the cut column is not at least in some way close, but this is only June 12. It wasn't all that long ago where the cut was far more discounted for March or May. So what's happened is while we are expecting a hold from the Federal Reserve, we're not expecting a cut till almost halfway through the year. And traders are really upset by this. And why are they upset? Not because we're not going to get our cheap money rally, but because there's a lot of concern that by keeping rates where they are, holding them where they are, could be very damaging to the economy. And that's what's being discounted into things like bonds. That's what's being discounted into things like the Fed fund futures that yield these target rate probabilities. There is your 3.5 minute, all you need to know about macro, because jobs numbers, inflation numbers, growth numbers, the consumer, all of that ultimately lands here, okay? There's your shortcut, your magic decoder ring to macro. The next thing we're going to look at here, we're going to get really thorough in this update, gang. The next thing we're going to take a look at is the seasonal tendency for what happens in September. Now, if you've been following along for some time, you know that July was a really bullish month. And over the last 5 years, this has been pretty much the way, right? July is really bullish, which is why I tell a lot of traders, if you're using a strategy that did really well in July, great. Put it in your back pocket. And the next time we run into an easy time to trade, put that strategy to work when things go straight up, right? And it's not that unrealistic to say we might be dealing with that a little bit later on this year, but just not right now. The first couple of weeks of September are very reminiscent of August. The last 2 weeks of September are where things tend to get ugly. So this movement lower that we're seeing, is this surprising? Oh gosh, no, gang. This has been the 5-year rhythm, if you will, the 5-year seasonal tendency right here. And if you've been keeping up with TTO, or if you're in the Sector Secrets Mastery or the Simpler Futures Room, we've been talking a lot about this movement to the downside and how that's usually how September behaves. Is this a surprise? It really shouldn't be. What's also not going to be a surprise is as we have that transition from the end of Q3 to the beginning of Q4, it's a huge transition, gang. We are going to chop around, and then we would see a little bit of strength. This could be a really great time for names that have been beat up, or the way I like to think about it is what names are on sale, right, as we go into Q4, because there's a really good chance that these are going to be scooped up with the expectation that they could outperform the last 3 months of the year. Think about it. You're managing money. What do you need to show your clients at the end of Q4 as you go into the end of year, as you're showing them their yearly results? Wouldn't it be nice to say, hey, look how strongly we finished. We bought these stocks at the beginning of Q4, and this is what happened. This is the chance to buy things kind of at the basement, the underground garage, and ride it up and show that disproportionate percentage gain. You can't do that buying necessarily at highs. You can do that buying stocks that are choppy or pulling back as we go into Q4. So this could be a really great bottom picking season as we go into Q4. Hence, I am very excited about adding to what we've been doing, not just the day trading that's been going great, but also the swing trading. So again, I think the most important thing is, what kind of alerts have we been putting out? Really, for the most part, due to the kind of things we're talking about here, August and now most of September has been all about the 5-minute chart and day trades. Now, everything I'm talking about here, gang, I share in the room, right? These aren't things that are happening off in some dark corner on my own. These are all things I'm doing in the room. What I do for myself is what I do in the rooms. So we have this 5-minute day trading nimble approach. Let's trade the AM session, maybe the PM session, get flat, and then do it all over again the next day. Right? A day trader's best friend is the very next session. So this is what we're going to continue to do, focus. But as we get into this window, this is where I'm very excited about swing trades coming back into focus. Those overnight trades of about 1 to 3 days on a 1-hour time frame, and those trades with about a 2 to 10 day time horizon on the daily time frame. So that means by early to mid-October, we should be firing on the day trading cylinder and adding the swing trading to it. And that's when this last quarter should get really exciting. So I've shown you a lot of statistics. I've shown you a lot of whys, giving you some macro breakdowns. Let's take a look at what we're going to do as we go into next week. And I think this is really interesting that what we have on the broader averages are a number of indices that are right now very much still in a neutral environment and still above their 200. That's a really great place to be. If I take a look at the S&P, let's go take a look at financials, heavily weighted sector within the S&P. Are financials doing something similar? Are we looking at a strong corner financials above the 200? We are not. This is going to be difficult. This is going to affect the likes of JP Morgan and other banking stocks. But what about healthcare? I'll get to tech in a moment. Healthcare is looking okay, right? Not awesome, but it is not above the 200. So as we go into next quarter, am I really thinking about swings in tech? No, gang, I'm thinking of, swings in financials or healthcare. No, gang, I'm thinking about swings in tech. I'm looking at XLK. I'm looking at XLC. I'm looking at XLY, right? These are the top 3 weighted sectors in the NASDAQ. I'm looking at the NASDAQ itself. That means I'm looking at things like Apple. Let's dig down to the next layer of index sector stock. I'm looking at those names in sectors and in indices that look like the most appealing buys as we go from Q2 to Q3. And then we ask ourselves, what indices would that benefit? And not to leave out crude oil, right? Keep an eye on energies. keep an eye on XLE, keep an eye on Exxon. These are not only great trends for longer term overnight positions, they're fantastic day trading names. I don't think there's been a day this week that we haven't day traded crude oil, Exxon, or XLE. So these are great short-term time frame setups too. I know I ran a little bit long on this update, but I really want to make sure, how do you trade more confidently? Not succumbing to the fear mongering, not succumbing to the, oh my gosh, the markets are, circling the drain. This weakness is very much a part of the 5-year rhythm of September. There's nothing here necessarily that suggests the Federal Reserve is going to be more hawkish. They're just not going to switch to being more dovish as soon as we like them to, right? But we still have a long way to go before we even get to 2024. Still think about where the strength is. Think about where the resilience is. I've shown you a lot of that right here. I hope this gives you a little bit of an edge in saying, okay, there are opportunities in this market, maybe not for longer term overnight, but we can day trade as well. Gang, on the 25th of this month, my day trading class is going to be closed. And the only reason I mention that is that when the day trading class is closed, that offer for the hourly price movement ranges for the year or for a month, depending on how you want to go with it, that's included, gang. That's included in the class. So if you head on over to simplertrading.com/clarity, all right, simplertrading.com/clarity, you can still sign up for the class. Of course, yes, at this point it's a replay, but what I want to make sure everyone takes advantage of by the 25th is you get the Lorna Bots scalping, which has been really popular. This has been unbelievably popular with our members because now we've added a 4th style to the mastery. Yes, we're going to day trade together, swing trade together. You get my position portfolio. And now we are looking at the bot scalping system, which has been great. But this is what I'm talking about. Either the 30-day set of indicators or the 1 year, depending on how you want to sign up. So if you're at that point where you're thinking, Rag, I'm up on my 1 year subscription, check out the Elite because you can re-up with the class and all these goodies and get 1 year included with the package, which essentially makes that HPMR included with the class it's basically free, okay? I don't want you all to miss it. I want to make sure I mention that before we wrap up. Have an awesome weekend. And by the way, if you have any questions, just give our office a call. They'll help you out. So have a wonderful weekend. I'll see you at the Top Tier Outlook show right here at the YouTube channel at 6 p.m. on Sunday. Let's trade confidently together. Let's make sure we have a good grip on macro and trends. We're seeking out relative performers. Sorry for the length of the video, but I hope it's been helpful. If you have any questions, if you have any comments, leave them below. Thank you for smashing the like button. I'll see you in the next update. Hey traders, Raghee from Simpler Trading. Thank you so much for watching this video. Be sure to leave a like and a comment below. And remember, subscribe and click the bell icon so you'll get notified of the next update. And when you're ready to join me for live trading, be sure to head on over to simplertrading.com. I'll see you in the next update.